Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Hope you're doing okay today. Quite a volatile session going on. Tweets, more and more, news that the U.S. president wants to fire Fed Chairman Jerome Powell, creating substantial volatility. And this is following the sell-off from yesterday. Of course, in trading, as you guys know, we always have to assume risk. And with that risk in an environment that can change quickly, we have to always respect risk. And in spite of whatever we do, as it says, if you remember that stops don't necessarily limit risk, but you always have to be aware of it. You must be adequately capitalized. And in trading, the unknown or inputs that come in disrupt the behavior of the participants. And that's where we can see outsized volatility and also stops not being filled at the price, but further away from where the stop was generated because they become market orders. In addition, if you're trading thin markets like the NQ or other markets with less depth, you're going to get skidded further. So always have to understand the market you're operating in. In this environment, the ES is one of the deepest markets as far as liquidity. So it might make sense, even though that doesn't protect you from getting skidded or going beyond your stop, which is what I mean is getting filled outside of your stop. There's more participants, more passive participants. And when a stop becomes a market order, you'll get filled sooner. Though under certain conditions, all bets are off. That's the nature of randomness. So let's take a look at this. This stream's based on structured trades. The TraderLab is a community of like-minded traders that come together to leverage their collective experience. This stream's based on integrating Bookmap Order Flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. Now, guys, there is no silver bullet or even magic 8-ball. But what we can do is, over a large sample size in an environment that is 100% random 100% at times we're going to have the opportunity to get in alignment with the market. Now, the nature of the market is when news inputs come in, no matter what they are, it can disrupt the auction because new inputs, whether it's news, a tweet, or somebody tripping over the cord at the CME, it's going to disrupt the behavior, and that can lead to outsized events. And then, so it's the nature of the business you choose to be in. And while I would say those are more outliers, depending on the current environment you're in, it can happen more often. And the current political environment and the method of communication lends itself to more volatility, more news disruptions, etc. So be aware. So let's take care of business. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. I do post regularly in the Bookmap Discord TraderLab community, but just like you, I'm subject to the same situations, the same environment. I take stops, you take stops. There's good days and there's other days. And the thing about trading, so you guys understand, it is not a predictive business. It is an alignment business. So the best we can do, in my opinion, is wait for locations that have an edge and then attempt to get an alignment. And when the condition of the market changes, when you define conditional change, then your job is to change with it or stand aside subject to a vetted plan. Over a large sample size of interactions with the other participants, which is very much a gaming process, you will, if you have an edge, extract the dollars from those participants. On the other side of that is we still pay the other participants, and we do take losing trades. It's just overhead and cost of production. Emotionally, That's a different thing how we quote feel about it, but what we do about it really is just the same as the casinos do. Only interact when we have an edge, and based on the statistical probabilities that we've done the work to vet and extract over a large sample size of random interactions, including news inputs and whatever else can quote go wrong or go right, we have an edge. We extract the dollars. But like casinos, we do pay the gamblers. There is overhead and cost of production, and our job is to only interact when we have an edge, and that's what the TraderLab is built on, and also to manage your emotional states, which will be completely out of control for most of us under these conditions. And that is where developing an understanding of the business you're in and developing the discipline to keep those emotional triggers in check. And that is, I always have found, at least for me, once I understood how the market worked and got a trade plan that had an edge and that I could become consistent, I still had a battle, and it's a battle every day to control the emotional triggers. Now, emotional triggers are chemically based. You get triggered emotionally, fight, flight, and fear, and then there's something else that takes over your intention. It is because it's primal wiring. You can learn about that more in the TraderLab, but I will suggest you can have the best plan on the planet, but if you cannot execute it, what is it? Where does that leave you? So understanding yourself is going to be as much a journey as, and maybe a more intensive journey than it is trying to figure out how to trade. You can learn how to trade, in my opinion, in the TraderLab if you do the work and reverse engineer what I share. There is no plug and play. You guys have been around for more than 20 minutes and jumped around the chat rooms and influencers and everything else, and you see all the stuff that says the only thing you need and the secret of this and that. Hopefully we're all, we've all outgrown fantasy, and we're more involved in seeking reality. Of course, that's up to you, but you're welcome to TraderLab if you're interested in checking it out. Now, I want to show you yesterday. Yesterday, as you guys know, this is, yes, part of yesterday when I posted this, but this was yesterday's structure. And this is called the micro composite. All it is all the volume from this swing low to this previous all-time high. Now, remember, this wasn't here. So the targets yesterday were around 6,300-ish or 07-ish, somewhere in here, maybe 05, 07. And I said in the stream, if we get below here, it sets up taking the stops out under here. We have stops there, there, there. And why is that? The market goes up to go down. The market goes down to go up. The market goes up to go down. The market goes down to go up. The market goes up to go down. And then the market goes down to go up. It's not interesting. But what do we know? The longs that are sitting in here have not been challenged. That's sell stops, sell stops, sell stops, sell stops. Here, take out some stops. Don't take this out. Then what this day? Don't take this out. So what does that tell you? Stop, 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 stops, right? Wherever it goes, it goes. So yesterday it was, and I posted this, this is up there. We got short at the new all-time high. And I know for many of you, it's probably very counterintuitive, but in the auction process, if you understand market mechanics, you also understand that if the inventory gets lopsided, and I always think of it like a boat, everybody's on one side of the boat is tipping. Well, I'm going to touch on that a little bit more today, but I want to show you now what happened yesterday. This is the end of the day. And where was our target? Let's go back. It was there to get under these stops, right? And nobody knows, so let's not think about that. But this is how the auction works. The auction is a pricing mechanism. So that was our target. I think we did pretty good with that. What do you think? So yesterday, at least for me, it was shorts only and short continuation trade. So it was a really nice day. I mean, these are the days that pay for the other days that we all have, the chop or no range or, whatever happens, right? Because it happens to all of us. Now, this is just another look at it, a little more zoomed in. That was our target. So again, the stops came out. Now, where else are there stops? Here and here. Now, not my thing. Now, let's consider what happened in the ETH. So the ETH, we get our short covering, which is what we're anticipating. So let's think about this conceptually. What happened? Yesterday, up, new all-time high, but sell stops under us, okay? Then in the ETH, squeeze. That brings our buyers in. So that sets up, and where do we open? Right near the ETH high. So for me, the first trades for me were longs. And there's two parts to this. Now, so initially, I was trading the long side, and I'll show you those. And didn't work out so well. It worked out somewhat. And I also know, now let's come back to the concept. Market goes up to go down, market goes down to go up. Market went down yesterday, it goes down to go up. What does it do in the ETH? It goes up. If the market goes up in the ETH and the inventory, now it's lopsided the other way, what can the market do? It could go down to equalize that inventory. I know that. And if you're in TraderLab, you know that. Now here is, as they say, the $64,000 question. What is it going to do first? Is it going to continue the squeeze? ETH high has a high probability. Now, this is still the ETH, okay? Resting liquidity is sitting here. Let's go a little further. Yesterday's naked volume point of control, which was abandoned, is sitting up here. And that 07, I was talking to you. Let me just see. I don't want to lose my place here. Let me just try to go back to this. This was above us. So when I was looking at this, we opened over here, I'm thinking, well, if we can get up into here, we can come back up here. So initially it was longs for me, looking for up in here, and then whatever, so, and then the whatever is part of the joy of randomness. Now let's come back in. Overnight volume point of control, ETH high, and these were my targets above. So when I got long this morning, that's what I was trading. Now let's look at everybody with me, by the way, we making a little sense over here. How are we doing in YouTube? Is everybody conscious? Okay, let's go. If you have questions, post them. I can't look at them right now, but I will come up for oxygen. This is a really busy day, very choppy, very volatile. And I'm going to try to point a number of elements out to you. In the short time I have, I really can't do a lot, but I do try to concentrate on different elements. Now, liquidity is in the book over here. This is still the ETH. I'm coming up and I have resting liquidity. Now let's look at this. So this is, I perceive it as resistance. Now, I'm going to show you my longs. Now, in hindsight, it's like, maybe we should have done something else, but who knows? So I'm just going to show you, because I show you every day. I show you, here's the good, the bad, and they do say the ugly. So this is a high probability target. And I know, and I got the resting liquidity, okay? So I'm now putting order flow together. What do I have here? Why is this sitting here? Great question. And we don't know what it will do, but we know statistically we have over 90% probability of taking out either the ETH high or low. And if you open over here, I don't know about you, I'd put the odds on this one, wouldn't you? And I have this. So I'm looking for longs to squeeze. But I also know the ETH, right? So let's look. So what I'm looking for is, and this is a structured trade for me, and it's a bit weird in the sense of it's advanced because of its speed. And I always suggest to developing traders that they don't trade here. But I'm going to show you because I do. And I also take my lumps, because I'm in a place of speed. The open is very fast. That's really the problem with it for me. So right here, I get my open, I find my buyers, I hold this, and I'm thinking, well, this has a high probability, so this is potential support area. This is a target, and then above. But I got to, so let's look, okay? So RTH open, and I have this. I see VPOC migration. This is suggesting to me the potential to go higher. I have more volume coming in over here, and then I break low. Now, I'm under this, so I'm watching this. And for me, my first long is going to be when it crosses over here, right here. I have absorption. You can see it here. So I should say the sellers here, and I'm looking for it to go down. When it reverses across, this is my first long. And, my teeth are chattering because, So this is my scale, and then I'm looking to come out the top. I get taken out. I'm laughing because it's just a trade, So I get risk neutral. I'm thinking I got you now. And then, of course, what's my obstacle? This, right? Absorption, selling iceberg. Now, for this trade to work, it really needs to hold this and not take this out. But there's another thing. The other thing is it's not unreasonable to get the continuation of the short squeeze. And I remember my initial plan was to go here, okay? Because it's the highest volume that we left behind. The market tends to check these things. So it can check down, it can check up, it can do whatever it's going to do. This is trading, who knows? So anyway, I get taken out. So that's a scratch. Now I'm going, well, it's a two-sided trade, two-sided auction. So what that's telling me is buyers and sellers. So I have my buyers here. You can see the delta. And now my sellers come in. You see the delta. Now what I'm observing here is, even though the market's going lower, currently these guys are not as strong. The delta, or the aggressors, are the buyers. So I'm looking to see here if I'm only taking stops out. Now, I'm just giving you an idea. I'm not saying this is anything anybody ought to do. I'm just saying I'm trying to use order flow and delta to read aggressors. And are these weak buyers getting taken out here? And right now, I'm seeing the selling, but I'm not seeing strong selling. But I'm seeing the price go down. So if I see selling and I see lower prices and I see less delta, then I'm really paying attention that are the buyers going to come back in again? And so he's like, are the buyers going to come back in? So let's go take a look. So I'm still stalking longs at this point. I'm still looking to see, and I'm not seeing my buyer. I've still got my sellers. I'm looking to see if I can find absorption. Here, I see my absorption. And here, this is a trigger for me because my sellers are here, right here. My micro high volume is here. I see my absorption. So right here, sellers are still in control. I see a buyer take a peek from under the from behind the tree and go, "Nah, I'm out of here." And now the sellers are still in control. Watch the delta. Now I see the buyers peaking again. Other than here, where are my buyers? Peak, nah. Sellers still in control. Peak again. Sellers still in control. Sellers now peak. Buyers take control right here. So right here is a long for me, and I'm thinking I'm reverting. So it's a long to here, and then I'm looking to come out the top. That's my trade. I'm sticking to it. This is VPOC migration. Now, this is a problem. Right here, the market needs to get through here to continue, or if I come under here, it's going to be splotto. Scale, I'm thinking I got a chance. Watch the delta. Sellers take a shot here. So right here, I'm seeing, watch the delta. Buyers, more buyers, less buyers. Market's going up. Less buyers, market's going up. Not ecstatic. Sellers take a shot here. Okay, so I'm okay. I'm scaled, you know. This, not good. Has to hold this. Needs to get above. Just don't forget. Needs to hold this. Needs to clear this. This is called a variable high volume node. I kind of created this for myself many years ago. Just based on years of research and trying to understand what is this all about. There was nothing there was no literature on this kind of stuff when I started doing it. The problem is, in between figuring things out, there's years of throwing things away. And this, so for me to go higher, I got to get above this. I'm going to put a little box around it. So this is my resistance. So let's just see what happens over here. Anyway, long scale, so you understand that. So I'm and then this teeth chatter, and I got to get above this. See what happens? Can you guys see the structure? Now, I call this structured trading. Unfortunately, it's all very, very clear in hindsight. These are trades I actually took this morning. And now, when we're coming up here, I know that my sellers were here. I know that it's possible that these sellers are going to go, oh, really? Have some more, which is exactly what happened. So I'm risk neutral, and because if I can clear this, and I don't know that, then, I'm back on the, this. And as the saying goes, not so much. Are you guys following so far? How we doing? How we doing in YouTube, guys? Please give a like if you're liking this. Now, this is based on structured trades. Now, here's the thing. How do you use this information? Now, for me, remember, I'm on longs. And until it breaks, it's not broke. For me, it breaks under here. Okay? And this is my resistance. So I don't know what it'll do. I do know where it might do it, because this is what trading with a plan is. And I know where my sellers were. Because right here, you can see my buyers. And why didn't the market go up here? These are the things. This is delta. And delta, it's not so much you see the delta. It's one part of it. It's what's the reaction? What does the market do when there's delta? Because if you have this, and this is decent delta, and the market doesn't go, what does it tell you? There's a passive side there absorbing it. And you had the liquidity. This is the beauty of Bookmap and the heat map. I know what was there. And I also know that if these sellers think this is a heck of a deal, they're going to show up again. So it's resistance. Now, here's the choices for this astute group of traders. You're long, going for this, or you're not taking longs and you're going to reference this and get short. I was on the longs. That's just my plan for today. But don't forget, I also know the ETH is long and the market goes up to go down. So I'm conflicted, but I'm kind of thinking at the time that, well, we have shorts in here, and we can remember the reason for the longs for me is the squeeze. So the fact that I only got this far, that's, as we say, part of the joy. Notice, let's come back. I'm going to draw this out for you. This is, and I always suggest in TraderLab, Let me get this in here. So remember, my first trades this morning were the longs. Where's my resistance? Let's draw this out here, okay? What do I know? I know my sellers are here. I know my sellers are here. I know my buyers are here. Why? Absorption, resistance, support, resistance, support. And I'll tell you, my teeth are chattering because I'm going, but yet I'm still on the long side here. But I have resistance. So basically, I'm just trading this and I have to clear this. And I know that. And, you know, second time is the charm. What do they say? Third time, you're in big trouble. So this was what I had to clear. And as soon as I see this, then I'm looking here. I have sell stops under this swing. And then that's that. Okay. Once I break under here and I can't regain this, it's see you later. Thanks for playing, Tom. And here's a coupon to the buffet. And that's just kind of how I look at it. Then I go, okay, this is my resistance. And I'm thinking, well, if I'm going down, and this should be right here, by the way. Let me just pull this back down. I don't want to forget that this is here, because this is potentially going to be something if I ever come back around. You know, I still want to get long, but now it's shorts. So now when we break down, let me show you this. Now, I always suggest in TraderLab that traders, when they're developing, let me take you back here again. So right here, there's, everything is okay here except for this. That's resistance. And if I can identify resistance, at least I know what it needs to do. I don't know what it's going to do. So let's not get too hung up on, quote, predicting, because it doesn't exist. What we can do is, if we understand market mechanics, we can start identifying obstacles and areas of potential behavior. Not what will happen. So I know as long as I'm up here, I have a shot. And I have statistics that kind of support going up. Well, when I fall, and I know my opening swing is here, and if I'm hitting my head on the ceiling and I can't get through here, then this trade's going to fail. And now when I say a trade fails, it just means, yeah, that trade's over. It doesn't mean that the plan is failing. It just means the alignment is changing. So in here, I have this. I have volume here, and I have volume here because I'm crisscrossing. This is the yellow line is the retail price, our highest volume. It's right there. I really need to get out here. Okay. So as long as I'm here, there's, quote, as they say, hope that spring is eternal. I mean, it's just one trade. And actually in here was a couple trades, but they're all fine. But I also know that there's trouble. Now let's go back to the delta. Strong selling. And look at the buying. I rotate all the way up, but where's my aggressors? I got buying. I got a little more buying, but where's the strength? It was the buyers here. Now it's the sellers. Now here, this needs to, we got to get meat on the bone. Sellers are still stronger. So I'm watching the delta and I'm getting, as they say, disturbed. I can't do anything about it, of course, but I'm recognizing that these buyers better come out of the woodwork. Hold on. I'm going to scrunch this up so you can see it. So buyers need to, and what do I see? This is the last shot. This is like sellers are in control, maybe. And here's where the buyers have to show up. We have to get above these guys. So this is delta. And you probably heard of something called delta divergence. Higher prices, higher price, less buyers. And then you see the strong selling delta again. And this is where it's like, this is not good. So this is trouble. And there's more trouble. Okay, so we break out and this fails. So this is failing. Now, if it fails, what do you do? Now, in the TraderLab I posted, once the long side is over, then we have to turn the barge around and go back in the other direction. And we're now failed here, okay? We now are below the ETH volume point of control, kind of an important area. We break below there. So all of this for me is really the outside edge, and see how it drops. Now, where do we pull back? Where's my resistance? It's actually right here, because this was support, right? You know the idea. Retail, too low. This was too high. I get over it, too low. Buyers, too low. Can't get back here. What about that? Too low, except now break below. What does that say? We're in the shopping. Guys, we're in the supermarket of S&Ps. We're shopping. If this now becomes this price, which was too low, and we find too high, then if we break below it, this price is no longer too low. It might be too high. Short. Now let's talk about a short. So in the auction, this is the key piece at the moment. And the delta. When I break below and I'm looking at the delta, I'm seeing that these buyers, are getting in the Barca Lounger and they're gone. So now this was support. Now it's resistance. Now I'm going to take you into structure and triggers and order flow. I'm going to put these pieces together and help you see it. Because once we're off the longs, what are you going to do? Sell it. How are you going to do that? A couple ways. One, and the primary one, and I always suggest this to developing traders, is something called mean reversion. I see where are we here? Okay. 1 second, guys. So this is one piece. The other piece is this. Now here's a trigger. So I have my sellers in control. Here's some buyers. So right here, you see the buyers. Now, where is the volume in here? Let me show it to you. So right here, I see absorption. Because why didn't the market go down? Icebergs, they're absorbing. Who knows? The volume is here. The sellers are there. The buyers are here. Break high. This becomes a buy trigger. But where's my sellers? They're here. So it could come across. This could just be a stop pick. Get these guys, and then we could come right back here. Right? So right here, this is my resistance. Now what happens here? I got my buyers. There's my delta. So yeah, we're going up. Right, Tom? Yeah. Where's my buyers? Here. And what happens up here? I lift. I got nothing. Nada. Zippo. Now let's look at structure in here. Because now I'm going to go down into microstructure. And these are triggers. And they don't operate, in the sense I should say, they work the same, and it's a fractal. So what is a fractal, you ask? This is like Matryoshka dolls. This is a fractal. Absorption, break high. That's a long trigger. Not to get long. It just says up rotation. Where's my resistance in the developing time frame? It's out here. And what is happening right here? This is an auction. This is the retail price in here. So if I get to an outside edge and I have resistance here and I reject it, now I'm putting a few more pieces together. Right here, let me show it. So you can kind of see it, how it was developing. This is your micro high volume. So there, high volume there. That's your micro retail. Absorption is here. What do I know in the next higher time frame, if you want to call it that? This is retail. So these are fractals. They're inside each other, like Matryoshka dolls, Russian dolls. And I know if I can't regain this, then, and I got liquidity stacking here. So I had the liquidity pushing. See this liquidity? That's pressure. It's skewing the book. I'm also aware that this is dropping down. I'm looking at a couple different components. This is too high. This is a trigger. This is resistance right there. Look where it comes back, you see? Trigger. Now this you can't do anything with, but this is what you're leaning on for this and that, if you were taking a short. Me, not so much. I was still in the long brain. Here, are we coming back in? Dropping? Sellers still in control? Buying? Maybe this is the big move up. Resistance right there. Sellers take control again. You can see the delta, and it sets up your short. And where do we come back? Here. So you have resistance here. You have micro high volume there. You have a low volume node here. You have your liquidity pressing. Look at see, I'm putting pieces together. None of them operate exclusively. They're all aligned. So this sets up a short. Statistically, the ETH mid has a high probability. So that's a target. Now, down here, we get VPOC migration. So let's just follow this thing. Now, this morning has not been an easy trade. It's very easy to hit your loss limit in this. We had a lot of news, huge volatility, as I mentioned at the top of the stream. So it's not what you call your easy day, if there is such a thing. But this day is much more challenging because of the volatility. I found it more challenging. I don't like it. It's not my thing. Not happy. Now, let's look. As the structure is developing, I'm now only taking longs. I'm sorry, shorts. So, shorts. So what happened here? Let's come back. You'll see why this kind of matters at some point. Not necessarily now, but it will matter. So what is happening here? If I fall out of a distribution, this is like too high, too low, retail, and then they go, hey, I'm not paying that, which was that, then I can start a new distribution. And then it's, where's the outside edge? Because this sets up, if the trend now is down in the developing time frame, it's out. It's called mean reversion. And this is the first structured trading concept that developing traders ought to figure out, because it's continuation trades. And this is what we were doing yesterday. All day yesterday, all it was mean reversion, continuation, shorts. Well, now we're back into short mode. What do? Same thing as yesterday, outside in trading. So what you're going to try to do with this is, and this is challenging, because where's the outside? Well, the outside is these low volume areas, and down here, outside, where's the outside? If you, for example, if you take a short here, this is the mean. Then you'd be looking to come out here. If you take a short here, this is the mean. They're the same. And you're looking to come out wherever, okay? So you take a short here, you got a scale here, and then you put your helmet on. Don't forget this. So short to there, down. Back here, same trade, down. It's called mean reversion. You're doing this all morning to there. And then you're looking to come out the bottom. And this was a very frustrating trade. I was trading like a maniac here, and all I'm doing is following my plan. And the other thing, and at 9, in fact, I posted this in TraderLab. This was interesting to me. The buyers were missing in action. Okay, they're not around until here. Now here, there's buyers starting to come out of the woodwork. Less sellers, more buyers. Now it's two-sided trade. Now look at the buyers. Where have we seen these before? Only on the open. So I'm looking at this and I'm thinking, and I posted in there, guys, the buyers seem to be, waking up. And that doesn't mean you do anything different, but it's kind of like, be aware. Notice the buyers now, how the delta has changed. I just want to point this out to you. Now, I'm still trading my plan, so I'm aware of delta, but my plan is sell out in. This is called the mean. This is mean reversion. And the joke in TraderLab is it's mean. What's mean about mean reversion? Is this the outside edge? Is this the outside edge? Is something up here going to be the outside edge? Where's the outside edge? Part of the thrill. At 9:30 Central Time, we get something called the IB stat. And there's over 90% probability we take out either the IB high or low. Just saying. Short. So what do you got here? Short to there, short to there, short to there. And you're trying to come down here. That's the goal. I'm telling you. And now this, let's come back. So this thing, just ridiculous. So for me, shorts got taken out over here, come up here. This is this is a short. I could not get on it. It was too fast for me. Because this is a short trigger right here. I just want to show it to you. I couldn't do anything with it. Those are the kinds of moments where you grind your teeth. This is a level in the TraderLab. This is a structured trade. Now, the thing about this is I need triggers. Well, I didn't get a trigger. I got we'll catch you later. I think this might have been a tweet, or this was we're going to fire Jerome Powell, and I can assure you the market is not thrilled about that idea. It's going to be not good in my opinion, but my opinion is not relevant. Why do you think the market's doing what it's doing? Not because they're a big fan of this concept, but it's going to mean, if it means easy money, that could have a short-term impact on the market. So we're in a very much volatile, everybody's running to both sides of the boat. Nobody knows, so this is a short. I can't take it, didn't do it, sitting here with the jaw on the table just like everybody else. What's going on? Because I got to, I'm not chasing the market around. I'm waiting for locations. And once I come up here, then it's very much what's going on. And that's kind of what I'm thinking. I'm saying, is the context changing? This is an input of some kind. What does it mean? So anyway, no short here. And this is my initial balance low. So we take it out right here, 9:30. And then we have two possibilities here. One, and this is news, is to come back in and come across the range. It's called the IBF. Or come back up here, maybe here, outside edge, this, and continuation short. So those are the possibilities. Because this is now the developing volume point of control down here. And what that's telling me is balance. So if I come out here, I can come up here, and I can rotate on here. So I'm still in the, I wish I know what's going on, but my plan says get short. Sweep, VWAP, looking for to come down again. So this sets up a short, scale. This sets up a long or a reversion trade. Support is here. Notice the chop up here, sets up short again, scale. This is what I was going through today. And I was getting, I felt like I was in a little dinghy out in the ocean, getting tossed. So this says, when you get this, it says that. When you get this, and I say says, it suggests. You get that. This, you get that. Mean reversion, VWAP to VPOC, structured trade. And what we're doing is we're trading outside in mean reversion. You get this, what does it say? that. Let's just see what it does. Doesn't have to do it. See it? Where do you go? You come here. Now let's come back to our delta. Very choppy, terrible trading for me. It's just hard. I overtrade in this. For me, I am not trying to get this kind of stuff. This doesn't pay. You know, I use the structure for risk neutral because my job initially is to try to buy my stop on my runner. And in this situation, I'm not loading the boat. I'm just trading very light because of the volatility. I know in this volatility, I'm going to take more trades. And every time I put a trade on, I'm taking risk. Now, that might seem logical and maybe obvious, but there's a difference for me. I don't need to take a lot of trades. I need range. So when I start taking more trades, I'm putting on more risk. But if I'm not getting range, I'm compressing and actually increasing my risk. So I look at it in the sense that if I can't trade the swings, which is really where, for me, I pay for my stops, then I'm kind of equalizing things where now I'm compressing my opportunity, but I haven't changed my risk. The only way I can adjust my risk in this chop is to trade lighter. So I will adjust to the conditions, but it's also just like everybody else. I take stops and it doesn't matter. But I know that because of the range, it's getting more challenging. I have to enter really on the head of a pin as best I can. Order flow helps me do that. It doesn't mean I won't take stops. I do. And I got to scale ahead of this. And I'm trying to get below this. Okay. So I'm trying for this. Get taken out, you know? So now I'm going to look again. I'm going to start looking up and I have to look higher. Sweep here. So this suggests maybe further. So nothing to do. Let's just see. Okay. See now, what do I have here? I'm back here. This is where I had my sellers. My liquidity is thickening up and this is a potential location. Let's observe it. Does this make sense? How you guys doing? Crazy, isn't it? How we doing in YouTube, guys? Please give a like. By the way, I don't like trading this market, so I'll give a thumb down for the market, but I'll give me a thumb up because this is trading. I mean, you know, you want to be a trader. There's going to be days where it's going to be like you're watching The Exorcist with that head spinning around. It's because, and this is a tweet, I think. You know, now this is a short in the TraderLab. Location, right here, your icebergs. This is your location. Now, what's the location? That. Why, you're going to ask. Now, it could be this too. Now, I didn't take this. I didn't get it because right here I'm going, where's my trigger? You know, I needed to break under. See this here? Let me show you the trigger. The buyers are here. The sellers are here. So I'm looking for it to break this for a trigger. Absorption. So I got the buyers are here. The buyers are here. I don't have a trigger. I'm sitting right here at my finger on the thing because there's my location, you see. So here I come up. There's my specific location that is on the map. And you saw me put it on here last time we were up here. It tells me that it was the price was too high here. We left it. So right here, I got my buyers and my sellers. My buyers are here. My sellers are here. I lift. I'm into the exact location. I've got my sellers up here. My buyers are here. I get below the buyers. Now I have, and I have this. So I have buyers here, sellers there, sellers here, and I'm at my location for a trigger. I get this, and now I'm right here, I'm taking my short, and it does that. I never got the trade on. And that would have taken care of some abuse today, I think. Didn't happen. So, but that's a structured trade in TraderLab. So, and I think some traders in TraderLab got that, right? Didn't some of you guys get in on that one? How are we doing in YouTube, by the way? Did we get some VHV and sellers up there? I think I saw somebody got short. Oh, you got it later, CMJ? Oh, good for you. So let's see. So let's look. Stops were under here. This is yesterday's low, I believe. Yeah, 62-ish. So we got yesterday's low, and here's a sweep, counter rotation. So let's just see what it does. Where do we come? IB low. Now, what's this? This is a structured trade in the TraderLab called the IB continuation trade. When we come back up, so what do you have? The mid, full session VWAP, VPOC, and we are rejecting this. VWAP is up here, and this is an outside edge. So as far as I know at this point, going south of the border. No clue. Let's watch. So this sets up a short, and this is a structured trade. What are we going to lean on? The sellers are here. The micro high volume is there. That's a potential short if that's your thing right here. And this is a structured trade right here. So this is a short, and then you got to get risk neutral, which means you got to see where these buyers were right here? That's a trigger. Now, it doesn't mean get long if you think the trend's down. It means counter rotation and sweep. Now, you had a sweep here. Where's that counter rotation? Nada. So, didn't do it. Part of the joy. There's nothing mechanical. Sweep. Notice what you get here. Less sellers. Market's going down. It's being absorbed. And the delta means less aggressors. Okay? Buy delta. Stronger. Where's resistance? Initially, it's right here because the sellers are here. Where's the stops? There. And where's the IB continuation trade? It's here. Micro high volume is right there. That little node sticking out. Outside edge is here. And then here. So you got low volume. And this is really where there's trouble. So this is the IBC, and you have to have a trigger for it. Let's just see if we get it, what happens here. Sweep. And this is another target down here. That would be it. For me, not a joyful day. Just not a good day. Just too many trades, too much whiplash. That's just the straight oil from the can. I would like to tell you something different, but I can only tell you what it is. And what it is in this volatility, it's very hard for me because as humans, trying to respond quickly, is a bit of a problem, right? So this is excessive. Let's look. There's your delta. And now where's your sellers? Where'd they go? Less buying. Now we're going into chomp. Where's my sellers? Everybody's going, I've had enough. Everybody's in the Barca lounger now. You guys have questions? It is what it is, guys. It's just a day. One day out of many. That's kind of how I look at it. How about a like? You may not like today as far as trading goes, but I hope you like the TraderLab and what we do here for you. So now the possibility still exists to come out the top and go back to the targets above. Not a recommendation, but this is still matters. So we'll look here. Because after yesterday and even today's abuse, what do we have? Well, we had longs in the ETH. We got longs, including moi, early on at the RTH open. Then we got shorts. We got shorts up to the gills in here. And then what does the market tend to do? If we run out of sellers, then what? Then we can come back across. So, so your choices are to wait to get outside to come back here. That's mean reversion. Or if you think longs, you'd be trading outside to come back there. You see what it did? It came back there. That's mean reversion. Now, the joy of this is if that's too high, we're going to rotate down. If we can get across it, then we can rotate up and maybe take out the high. And that part is not my job. I can't tell you what it'll do. I can tell you what it might do, and I can tell you where it might do it. That's as deep as this goes. So what do we have? Sweep. Look at the selling icebergs. There's 1,400 there. Tons of sellers up here, which doesn't mean it won't go higher. It just means there's sellers. So the buyers are being absorbed here. That's why, what do you see here? Where's the buy delta? I got buyers here. Are we going to rotate up? Or these icebergs, they're taking the other side. So it's like Pac-Man. Are the buyers able to consume this selling? And that's why when I look at delta, I'm looking at the reaction of price to it, because it tells me something. If I got buyers here, I got less buyers here than I had there. So what happens? If I got less buyers and I still got good sellers, they're going to absorb the buyers. If I come up, now what do I got over here? Nobody's showing up here. I got buyers. But now here, I got my buyers. I want to see, can we get up here or do the sellers absorb? So this is very important what happens here. If I can get across here, I can come back and possibly rotate or come out the top. So that's the possibilities. I'm sticking with it, but I can't tell you what it's going to do. Just the structure. Well, Mark, going long at the open is, I'm okay with going long, with structured trades at the open. That's what I was doing. But once the long side structure fails, then there's no more longs. In fact, there's shorts, because then the longs from the ETH are the guys underwater. It's not about the triggers. It's about the behavior and the structure. There's triggers all over the place here. It's location of these things. It's not anything more than that. So out here is too low. No way to know until hindsight. So then it's either trade management or you're way out here someplace looking for it to come down again. Or you're out. This is where in your plan you have triggers, but the primary input is something called context. After that, it qualifies what trades fit in the context. So in the RTH open, the context was up. So the possibility was continuing the squeeze. And we got some buyers, and then we found our sellers. Once we found our sellers, and then that failed, the long side failed after a couple trades, then that's the end of it. Then it's okay. Then it's either going to equalize a little lower and come back, or it's toast. Well, it was toast. Part of it being toast was the ETH was long. So the thing to be aware of is where the market tends to rotate over itself. So the market goes up to go down, the market goes down to go up, the market goes up to go down, except The stops are here, you see. Market goes down to go up. To get the stops here. The market goes up to go down. The stops are here, the swings. The market goes down to go up. The stops are there, see? And then the market goes up, maybe to go down. Or not, see? So it's always rotating over itself. And it does it in all time frames and fractals. That's the other joy of all this. The market goes up to go down. The market goes down to go up. The market goes up to go down. The market goes down to go up. The market goes up. This is yesterday to go down. And then the market goes down to go up. That was the ETH. The market goes up and then to where? Clueless. To go down. The market goes down to go wherever. You see kind of the way it works. The joy of the whole thing is it's all random. Inside of itself, it's going to do the same behavior on top of these rotations. So our job is to try to get in alignment with it, and we don't know, So that's the thing. That makes sense. So Mark, I hope that tells you. It's not the triggers you got to be concerned about. That's easy. What you need to be focused on is the condition of the market and who's off sides. I always think about, because let's think about it. If this leg is short, there's buy stops for these guys, and some are going to have their stops at this swing, and some are over this swing. Well, we got these guys out. If I get sellers here, there's going to be stops there. There's going to be stops here. Do I want to get short now? Probably not. And that's not a recommendation. I'm just saying is we got excess here. See the buyers? Let's look at the delta. Sellers, less delta, sellers, less delta, sellers. Buyers come out of the cracks in the floorboards. And look at the movement. There's a lot of movement. Where's my sellers? Look at the delta. Now, there's not huge delta here, but what does that tell you? And then look at this. If I'm not seeing, where's my sellers though? Got a little hiccup right there, but buyers, even here, the market rotates down. They're selling delta, but my buyers are absorbing. And then here, look at this. Now this suggests counter rotation. Is it a short? No. Why? I'm back at a fair price. This is too low. And now my stops are here. So I have to be conscious versus unconscious of the fuel. Market goes up to go down. Market goes down to go up. Market goes up, rotate down. If I can't get the longs out, and this is aggressive buying, then who's on the hook? The shorts, the shorts. So, subject to your plan, it's long or you're in the Barca Lounge. Anyway, that's just today. Today's one of those days. Anyway, I hope that's helpful. Fairfax City, it is 100% random, 100% of the time. The solution is based on 100% random, 100% of the time. The edge is in your trades, not in the market. The market is random. The business model is very simple. It's gaming. It's casinos. What is not random in a casino? The game. What is random? Everything else. Cards coming out of the deck are random. The gamblers play the cards randomly. That's all random. If we're using a business model that's proven, it's gaming, and we're in a 100% random environment just like the casinos are, except for how they play the game. And the way they play the game is based on the edge. They don't play games without edge. So the idea of edge is structured trades that have edge in a random environment. I hope that makes sense, Fairfax. Yes, 100% random, except for the edge. The edge is not random. So yes, you're absolutely correct. The market's 100% random. And it tweets 100% random. Firing the Fed Fed Chair Powell, tweet, market reaction. Let me ask you a question. Is this new news? No. So what does that set up for us? If we get this reaction, which is already in the blend, and I see excess, which I don't know until hindsight, by the way, then I want to be long. Notwithstanding getting abused, which is always part of the joy. So for me now, it's not shorts, longs. Not a recommendation. What do I know? I don't know. Not my job to know. Here's what I do know. Shorts here. I know. Here, let me draw this out for you. I think I didn't do this. I got to show you structure. And those of you in TraderLab, draw. Otherwise, you're not going to remember. What wouldn't you remember? If you draw this in the VHVN, this is a short. That's a short. These are structured trades. You could be selling that. Okay? And as you guys know, this one got away. This one didn't. This would have been nicer, but that's the way, that's life in the fast lane. Pull back, going to zero, reaction back, and where am I? Back at the fair price. Now I can rotate in here, but what do I know? I got all my stops sitting up here. If I can come out here, now I'm back on the trade that I was looking for from this morning, which is to go here. Part of the thrill. And randomness, So we'll get to see what it does, and I don't know what it's going to do, Not my job. I do know this is resistance. I do know if I come outside, this is my next area of resistance. If I'm trading longs, and based on this kind of thing, I think longs might be an idea. It's not a recommendation. Then if I can get through here, I'm going here, maybe. And if I can get above the high of the day, I got this. That's already where I'm headed. Now, what's it going to do? Come to TraderLab, we're all going to throw our hands up and go, well, I might do this, I might do that, and I might not do any of that. Because that's what trading is. It's the best you have here is maybe. Maybe they'll do this, maybe they'll do that. Maybe there'll be a tweet and we all, get thrown under the bus. Right? Isn't that trading? How we doing it? How we doing in YouTube? Please give a like. I hope you get something out of this. TraderLab, how you guys doing? If you got questions, post them up. I will do my best. This is not, the term easy does not apply to trading, but it's about alignment. And there's going to be some days you're going to be flipping like a flounder on the dock, and there's nothing you can do about it because you're trying to get an alignment. The market's very volatile, and doing this kind of thing, there's just really very difficult. So what I do with this is I just take my trades, I follow my plan, and I manage my trades based on my plan. Because I have no way to know whether when I see this, whether we're just going to go to zero, right? And then when I see this, I have to go and look where my last sellers took control, where they were in control, like here. Once I come above there, then I'm back at the mean. Now what? Well, if I come outside and I know here and here, the buyers took control here, right where these sellers were, buyers are here. So where's my outside? It's kind of out here. And here's the low volume node. It's right here. What is this? Remember we were doing shorts and I was talking about mean reversion, which is outside in. Well, if we think the trend maybe has changed, then how do we trade this? It's the opposite, outside in from here. So I turn the barge around and now I'm trading longs in the opposite direction. I'm still trading mean reversion. Mean reversion to me is the key. If you understand mean reversion, you would have had shorts yesterday, primarily, unless you're a counter trend trader and everybody does their own thing. It's not for me to say, so that's up to you. Today, it was shorts, mean reversion coming down, and now the condition may have changed, and I say maybe because who knows, now it's longs, mean reversion up. Does that make sense, guys? How are we doing in Discord? How's the TraderLab community today? Is everybody kind of exhausted? If you hit your loss limit today, I'm going to tell you, oh, you got wrecked? Yeah. Don't worry about it. Getting wrecked is part of trading. Oh, yeah, Moonwalker. Welcome back. Haven't seen you for a while. If you got wrecked, let's talk about getting wrecked, which basically means losses, of course, or FOMO in a combination, because in this environment with this volatility, the juices will be flowing. And why do we have loss limits? Because there's going to, what there used to be a song, there's going to be days like this. This is just part of trading. And no, the question is not that you hit a loss limit or you take losses. We all take losses. We all hit loss limits. That's just the business. And why do we have loss limits? And why do we get wrecked? Well, we get wrecked assuming, and sometimes it's emotional, FOMO and the lunatic gets unleashed. And then you're off the rails, and that's a problem. But that's a different problem. But you could be following your plan very effectively and still hit your loss limit. And then what is that all about? Does that mean you trash your plan? No. It means that the current condition of the market's not in alignment with your edge, because the market and your edge are not going to be in alignment often, or the market transitions. And without the benefit of hindsight, you might be zigging when the market changes and you won't recognize it. We try, but why would you be maybe thinking longs now when we were taking shorts earlier? Because the condition has changed. So part of in the TraderLab, the process is defining change. And again, and I use something, and when I was building trading systems, and I talk about this, it was conditional statements. If this, then that, then you do such and such. Well, here it's, if this, then that, and you're going to wherever. And then if you come back here and you get above this, which is where the sellers were, so if this, then that. If I stay below here, this, then back to there. If not, then what? Back to balance, then what? I flip the barge around and now I'm going outside in because something has changed. See the buyers? What has changed? Look at the aggression. And the real key to this thing right here was the fight. This right here was the defining moment, because the sellers showed up here. There's the icebergs. The buyers, and there's a sweep, were here. This is an auction. Right here, it looks like the sellers got the ball, and then the buyers just rip it down off the shorts. So even if you take a short here, you're going to take a stop. Now let's talk about getting wrecked. Good term for it. But really, if you're following a trade plan and you have loss limit, you have to have a loss limit, not just lose your control and blow yourself up. That's what many developing retail traders do. It's because you're overtaken by the juices, the chemicals in your brain. You need to have a circuit breaker for that. And because what are we trying to do then? We're trying to make it back. We're now thinking about P&L. We're not thinking about business. So it's very important to develop, and this is not easy because it goes against our primal wiring, chase that thing. Oh, gee, the rabbit got away. We got to feed everybody, So let's go get that rabbit. Doesn't matter that there's a woolly mammoth looking to stomp on you around the corner. I'm going to go after the rabbit. Well, now we're throwing risk out, risk aversion, if you will, or risk management out the window, and now we're totally out of our minds. And I mean, when I say out of your mind, I do mean that, because now it's no different than, what people kind of quote, lose their temper. What is losing your temper? Isn't that out of control? And what generates, just think about how humans behave, human response. Crimes of passion. What's passion? Aren't you out of your mind? And that could be good or bad depending on what the circumstances are, but let's just say it's bad. Okay, passion. Well, we feel passion, and that's chemically induced. And socialization, hopefully builds in some buffer to those extreme elements. But many of us in society don't have control. And under certain conditions, we don't have control, no matter what. And in the trading environment, that button is being pressed all the time. I hope that makes some sense. It's really important. Yeah, PT, if you're interested in my settings, go to the Bookmap Discord TraderLab community. There's no cost. There's a link in the bottom of YouTube because there's a lot of settings, for this. And again, the thing about settings is what speaks to you. I'm a minimalist, so I don't use indicators. I just read it because I'm the indicator. This is the retail price, right? So if this is too high, I can rotate. Now, the fact that this is here, I know this is potential support out here, low volume outside edge. So how does the market tend to work? It tends to come outside, pick stops, which will be under here. Support will be in this area. Now, it's not a trade recommendation. The market could just, do whatever. This is trading after all. And now, remember where the stops are. They're here. And sellers were here. So this is my area to observe, not a recommendation because the market could do anything. It's been a really challenging day. You have a day like yesterday and you think, whatever it is you think, and then you have a day like today and it's like night and day. And the only reason it's different is because the condition of the market's different. That's all. So let's see what we get. Remember where the stops are. They're going to be out in here. This is high volume. Well, let's see where this comes from. It comes from here. I'm going to draw a little line over here. This is an outside edge. Stops are here. Buyers were here. I'm going to put a little box around this. I'm just building a little structure for you so we can see what might happen, not what will happen. Completely clueless, not my job. This outside edge is here. Stops are there. So here, and this is the mid, lovely spot. So if I can get under here and pick, then the buyers that were here, these guys, these icebergs, might underline, come in. And if I don't get there, there's nothing for me to do. This is my outside edge. This is the reversion. So the idea of this, if it worked, was to get under here, then come there, and then wherever. Let's just see if it happens. It's not a trade recommendations, guys. You don't need this. Anyway, if you guys are in YouTube, please give a like. Appreciate you visiting the lab. Trading is random, and you just have to kind of follow your plan. If you hit your loss limit, you just hang it up and you go, well, tomorrow. Because the job of a trader is risk management first. It's not the P&L. You stay in the business by following a plan, not P&L. P&L is the outcome of having an edge. It's not it's a result. So let's see what happened here. Buyers were here. This was absorbed. So this is where the buyers are. I come down here. The buyers are still here. My personal preference, is just me, is to get under this, so to get the weak hands out. If I can't get under there, then my choices are to pay up, and I got less range, or not take the trade. For me, the better trade is pop. And you saw me do this yesterday. I was talking to you guys about where the outside edges are, which is under here. So didn't get there. That's the target. You can see the market mechanics. And again, where was the location? Here. And why would I want it out here? Range. And to get the stops out. If I can get the stops out under here, and I see the absorption it makes it better for me. That's all, to go there. And then we're looking up here. So I wouldn't be on this unless, now I have to, share with you, unless if I got long here, my stop has to go out here. So that's my choice as a trader. For developing traders, not so much. The trigger's here. But then you still got your stops here, and you got to be underneath this and this. So from there, 75 down to here is like 5-point trade. So see what I'm saying? So that's your call, not mine. But this is a trade, except, again, if it meets your parameter. But I hope you can see the logic for the trade. Well, yeah, Ed, it's a challenging day because of the volatility, and you really are kind of flipping like a flounder on the dock here. It's difficult. A lot of transitions. It's not the way. It's not my kind of. It's just too much work. I trade for larger swings, so when you get into this kind of thing, it's just a lot. I trade more, and I don't like to trade more. I like to trade less because my perception is more trades, more risk. So I prefer, and it's just personal preference, less trades, more range. So this is an okay trade, except if you require a pick, you don't have it. If you pay up, you do have it. But I want you to see the concept and where you're trying to go with this thing. This is resistance. So a few ways to do this is you're going to there, you're going to there. If you can look at this liquidity stacking up here, and we may come out the top. If we come out the top, which is kind of what my plan, remember, that's my plan from this morning, we're doing this. If I can't get through this, and we might not get there first time up, we may never get here. So this is my next target. Let's just see what it does. That's why I draw these things. Otherwise, would I know that this is material? I'd forget all about it. Outside edge. So this could do this. This is called mean reversion. TraderLab, are you guys following the reversion idea? Ben is asking, when bear markets happen, is it always news driven? No. Bear markets happen because we found the last buyers and the price is high, and then it attracts the sellers. And I mean, there's other reasons for it, but remember how the market works. It's trying to figure out what's too high and what's too low. At some point, we will find too high. I don't know where it is. It's not my job to figure that out. I mean, is the high of the planet yesterday's all-time high? I don't think we're done with the quote bull market, but I don't know. So my job as a day trader is alignment. It's not anything more than that. I do think a possibility of a bear market is in front of us, like it always is. It's just when, not if, when, because that's how the market works. But no, I can't. My job as a trader is to get in alignment with the rotations or fractals I'm trading. I trade inside the higher time frame. And when I get outside moves, I'm getting in alignment. So we sold near the high of the day yesterday, all the way down to here. I mean, that takes care of days like today. If you're getting thrown around and, slapped around by the volatility, that's what these are about. You see? And this day, I remember this one. This day was shorts coming back here, then longs. This day, I don't remember exactly here, but up to there. Take these stops out. Remember, where's the fuel? Now what do we know? The fuel coming down then was there. Those are all the targets. And every day I was taking shorts, trying to get into the stops. We were short here, we were short here, and we're going for that. And then here we're going for that. And then here we were going for that, and wherever. Right? Now we had, this is yesterday, by the way. Now what? Now we're going for this. But, you know. Where's our resistance? Let's just see what it does. And again, these aren't trade recommendations. Everybody's clueless. Where's my stops? Over the swings, right? Notice the liquidity coming back in up here. Let's not forget that. Is everybody with me? Yes. So we want to be aware of this, and we want to keep our eyeball on this thing. And this is important up here. Stops are sitting here. So the way I tend to operate, and it's not a recommendation, you got to vet everything, of course, is trade into stops. See, part of being a developing trader is we all take stops. I mean, it doesn't matter what you do, you're going to take them because they're there to protect your account. But the other part of taking stops is to understand where the stops are. If you know where the stops are, wouldn't you be trading into them versus joining them? So if I, like down here, I know there's stops here. So what I want to do is try to get them out so I can get the stops out there, there, there. That's what sets up my longs, because I'm trading the same thing I showed you in the higher time frame. I'm trading rotations. I'm a day trader. And if I can get on something that has more range to it, because I'm trading Microstructure dolls or fractals, I'm trading inside, what I'm actually doing. And we all do the same thing. We just might not think about it. I'm trading inside this thing. But when this happened, I was trading this. Now I'm inside of this. I already got under here. Thank you, Tom. It was great. And now what? I got my shorts in. So in the ETH, I had my longs. I was looking for some continuation. Didn't get it. Had some, not enough. Thanks for playing. Then I get new shorts. So I got shorts here. I had longs in the ETH. They got hosed. I get shorts now today. The shorts now potentially get hosed. Come back here. And then eventually, some maybe, and that's not a suggestion or a recommendation, it's clueless, above here. But for the moment, just trying to get back here. And where is that? There. So this is kind of where I'm going. So this was the morning trade to go there. And then it was get the shorts in. Now what happens to the shorts? They become the buyers. Where's the resistance? There. Anyway, please give a like if you're visiting in YouTube. I've run out of time. I wish I could spend more time with you, but if you're interested in this, come to the Bookmap Discord TraderLab community. There's no cost for it. It's available to all of you. Use the link in the bottom of YouTube. All you got to do is verify your Discord username, so we know you're not the spamulator. Also, there's a library of webinars and a document section. This is available to all of you. Ned, thanks for curating this. Watch the primer stream first. It's about an hour long. It's got about 34,000 views. Be sure to watch the one Stop Gambling and Start Winning. Remember, this is a gaming business. You get the opportunity always to choose which side of the table you sit on. Either sit with the gamblers or sit with the house. That's your call. Thanks again for visiting TraderLab, guys. Appreciate your time and interest. Don't forget to give a like on the way out. Subscribe to the channel. And I'd look forward to meeting you in the TraderLab. Thanks again, everybody. And thanks today for visiting the TraderLab. Hope you got something out of it.